What's up guys, Spenny here. Hope you're having an amazing day today. It is beautiful weather up here in Canada for once. Absolutely loving the sunshine. In today's video for you guys, I'm going to be covering this analyst review on Palantir. He is calling for well over $100 a share over the next 2 years. And so I'm going to go through it, show you guys how he comes up with these numbers and when to expect this to actually occur according to him. We're also going to get into the valuation of the company. We're going to show the Elliott wave. So he uses the Elliott wave to come up with this price target. So that's quite interesting. Elliott wave is not something that I personally study. So I'll show you guys that. And then also he talks about how insider selling is actually a good thing. So that's obviously very contrarian to most people's opinion on insider selling, but it is interesting. It's definitely a different side to things, so we'll get into that as well. So he says here, Palantir bears often point to insider selling and the weight of government contracts to justify their position. However, I argue here that what they view as a weakness is in fact a strength. Using EWT, that's the Elliott wave theory, I reach a target price of Palantir of 102 and 145. Very bullish. This is his thesis summary, and he has some good points here and points that I agree with and I've spoken about in the past. So, Palantir has had investors divided since its IPO in September 30th. It has gained the support of ARK manager Cathie Wood, but many bears still argue the stock has little room for appreciation in the short term. While some of these arguments have merit, I find myself thinking that many of the alleged weaknesses of Palantir are in fact strengths. Exposure to government contracts is in fact a huge tailwind and strategic advantage in my opinion, and the argument that insiders are selling is overblown. Stock options are the best way to attract talent, something Palantir has plenty of. Overall, I believe in the technology and growth story, and while profitability is still in question, this should not be an obstacle to the stock appreciating in the next few months, years, or even decades. Now, I definitely agree with him on the government contracts. This should not be a concern for people. Governments are going to up their spending massively in this sector, and Palantir is the best company for that. They have over 18 years of building relationships with the governments. There's no reason to suddenly become worried about it. So that is definitely a strength in my opinion. And he could be right about the insider selling being overblown. We're going to get more into that in a second. He goes into a bit more details here. Now he goes on to say here, company overview, founded by PayPal Holdings co-founder Peter Thiel in 2003, and is essentially a data analytics company. The company has two main divisions / products, Palantir Gotham, which is used to serve government contracts, and Palantir Foundry, which is a platform offered to private enterprises. And if we get into the numbers of the company, because he mentioned how profitability is still an issue, this company is fully in growth phase. So you can see the revenue has exploded the last couple of years, going from about $600 million to $1 billion in revenue. Massive growth for a company that's 18 years old. Our gross profit has also increased drastically, but you can see the company spending a ton of money on sales and marketing and research and development, $683 million and $560 million. And our general and administrative expenses are also $669 million. So we have a net loss of $1.1 billion. This is not the kind of spending you see in a super mature company that doesn't see much growth for them anymore. In my opinion, this company is just getting started with its growth. We're just entering that software revolution where data becomes one of the most important parts of any technology company, and AI, of course. This is really the time where Palantir is going to shine, and they are reinvesting a ton of money back into the company to really focus on growth. This is the time where the company is going to grow more than ever before. Now let's move on and see how this analyst articulates how share dilution is actually good. So the other point I'd like to dispute here is that the idea that insiders are selling because they have no faith in the company. This is wrong on a few levels. First and foremost, Palantir used stock options to attract talent. This has been the case for years with highly competitive and innovative tech companies, and is a great way of rewarding employees for their work as well as aligning their incentives with the firms. The fact that insiders sell shares is only logical since they have to exercise their options before they expire, and often this exposes them to very high tax liabilities, like with Karp's most recent sale. So in Karp's case, exercising those options will cost Karp $12.8 million in return. He will receive stock worth $1.6 billion. This will create a mammoth tax bill, and Karp is likely to sell a substantial portion of those shares this year to cover the liability. Now, yeah, my thoughts on that. It's understandable that insiders are selling. It's a newly publicly traded company. They have a ton of money locked up in it. And, they could sell for tax reasons, diversification reasons, ton of reasons to sell. So it's totally justified on their part. And it's not as clear case as some people think where they're just bearish on their own company. No, they could think that Palantir is going to do great in the future, but still sell shares. There's many reasons to sell, but there's only one reason to buy, and the only reason why insiders buy is if they think the price is going up. Now let's move on to the valuation, where he gets into his massive price target. So it's hard to value a company like Palantir because it has yet to return a profit. Even insiders have pointed out that Palantir is a long-term play. One thing is for sure though, Palantir has got many excited and also has the added benefit of being a popular ARK stock. Therefore, I think Elliott wave theory could be used here, as I did my recent article with Plug Power. So let's see where he ends up with this theory of his. So you can see here on the high end, he has that white little box there that's indicating the price could go to $149. And this is in a relatively short time frame. So he goes on to say here, since its IPO, Palantir has reached around 45 a share. The recent pullback could be seen as a second wave, so as long as the $20 low holds. The third wave could land us anywhere in the target box area between 102 and 149. What would be harder to say is the timeline regarding this appreciation, but I believe it can materialize in the next 2 to 3 years. So anyways, guys, I'm not an expert on the Elliott wave. If any of you are, make sure to comment down below. Let me know your thoughts around this theory on how he believes we're going to see 102 to 149 possibly in the next 2 years. That is some massive gains, and that'd be amazing to see. But I don't fully believe it until I see it, but we'll see how that plays out. Anyways, guys, if you got any value out of this video, make sure to drop it a big thumbs up, and feel free to subscribe if you want to stay up to date on Palantir. I do cover this stock almost every day of the week. Anyways, guys, really appreciate you watching till the end. I'll see you on the next video.